Are you concerned about the stock market volatility? Are you wondering where the bottom is? Joining us today on Coffee Break is Jason Castelli, Vice President, Head of Investment Strategy at Raymond James Ltd. Jason, have we experienced the bottom of the market, or is there another drop coming?
Well, thank you for having me on the show today, Sybil. Well, bottoms are a tricky thing to spot. Historically, if we look at examples of bottoms, it's difficult to know when you have truly found a bottom. But one thing is clear is that we've entered a recession, and knowing this, we can look at past recessions and how the market has performed in recessions to figure out what the path forward could be. What we found is that bottoms take time to form. It's more of a process rather than a singular point in time. And the weight of the evidence that we see today is that we're in an early stage of a bottoming process, which brings me to a very important point about asset allocation. There are many unknown risks in the market today, and the best way that we know to protect ourselves from those risks is to have a proper asset allocation, a mix of stocks and bonds and cash. By having the right type of mix that's appropriate for your investment objectives, this can help reduce the volatility in the equity markets, those big swings that we see on a monthly or weekly basis. So wonderful thing about asset allocation is that bonds and equities tend to move in opposite directions at the same time. And so when stock prices are falling, bond prices tend to rise. And when we feel that there's an opportunity for us to be moving back to the equity market, we can sell some of our bonds and some of our cash and move into equities and take advantage of a very important concept called dollar cost averaging. And so for our clients today, we're saying we don't want to have too much allocation to equities. We want to be a neutral weight, and that might depend on, neutral may depend on what your actual client profile is, but a neutral weighting to equities, having higher levels of cash that we will then look to deploy through this bottoming process that we think will take some time. And once the evidence is clear that we're entering a new bull market, we can then put that money into the market. So finally, I'd just like to emphasize the importance of having a plan. Remember the ultimate goal and your purpose for investing. Consider the risks and your time horizon. Stick to your plan to achieve your objectives. The market will continue to go up and down. It always will. But managing your investment within a plan can help protect your capital in very uncertain times.
Jason, that's fantastic. Nobody has a crystal ball, so very good advice. And of course, I got to throw in a little disclaimer. For those of you watching, make sure you seek independent professional advice before making any decisions on your investments. And if you enjoyed this and want to learn how to make smarter financial decisions, go to thewealthylife.com. And that's our coffee break. See you next time.